right, thank you so much for that. I think I hope you guys agree. I don't think I've ever seen a negotiation in real time on stage at an event before. So, for something called Proof of Talk, I guess it makes sense that we would have a live in-person negotiation. That was kind of fun. Coming up next, we've got a fireside chat, crypto payments revolution, with none other than Ivan Soto-Wright, co-founder and CEO of MoonPay. He's going to be in conversation with Farokh Sarmad, President, Rug Radio, Decrypt, and Myriad Markets. Please help me by welcoming him to the stage with a big round of applause.
What's up, Paris? How you doing? No, what's up, Paris? How you doing? There we go. This is a pretty historical place we're in. I'm not gonna lie, I wasn't expecting this, Ivan. It's pretty cool, huh?
Yeah, it's an important conversation.
We're having the big conversations under a very big roof, so no pressure here, Ivan. Listen, Ivan, I've known you for a few years now. We're friends. We got a lot of mutual friends. I followed the success of MoonPay, I think, almost since day one at this stage. And I was talking to a friend of mine yesterday saying that I'm going to come moderate this panel with you. And we were talking about how successful MoonPay is and how, as a founder, I look up to you. But then he asked me, so what exactly is Ivan's background? And honestly, I had no idea. And so I kind of want to start this panel by asking you, what's your actual background, Ivan? Who was Ivan pre-MoonPay? Where do you come from?
Yeah, so I never would have imagined I'm here in Paris right now giving a talk on crypto. If we rewind a couple years, in college, one of my good friends wrote his thesis on Bitcoin. And that was really an eye-opener for me, reading the white paper. I think there was something quite special there, this idea of internet money. And I remember buying my first Bitcoin in 2012 on localbitcoins.com. And I think the real magic happens when you actually go download a wallet for the first time, and then you start to recognize that the future of money is going to be based on the internet. It's global, it's 24/7, it's 365. And with this wallet, you essentially, crypto comes from the word cryptography. You have a public key and you have a private key. And that public wallet address, you can put it on the internet, and anyone can send you any form of value. And to me, I was like, if you think about a lot of our legacy systems, they were built decades ago. We are going to upgrade the entire financial system by putting it in the form of these new wallets. So the wallet, to me, was the paradigm. And so when we first started MoonPay, we said, okay, well, if the wallet is going to be the paradigm, how do we make it easy for people to participate? And if you went back a couple years, pretty much the only way that you could interact with a wallet was you had to go buy crypto on a centralized exchange, and then you would move it directly into a non-custodial wallet. And if you think about that, that's a lot of friction for a user. So, really, a lot of my mind is around how do we really improve the user experience? How could you embed that directly inside a wallet and make it easy for someone to on-ramp? That's the term that we use in crypto, on-ramping people into the crypto economy. And what better way to start on-ramping than tapping into the distribution of Visa and MasterCard? So the very first version of MoonPay we launched in 2019 on Bitcoin.com, and we made it easy for customers that went to Bitcoin.com to use their debit card to on-ramp directly into a non-custodial wallet. Fast forward to today, millions of customers around the world. I think we hit 30 million customers at MoonPay. And our job is the backwards compatibility. We want to connect debit cards, we want to connect bank accounts, we want to connect local payment methods, PayPal, Venmo, Tink, anywhere in the world. We want to connect those payment methods, and we want to make it easy for people to get started and get their first crypto.
So, congrats on that. That's really cool. So you're talking about crypto payments revolution, which is the topic of this panel, this fireside chat right now. What made you jump into that with MoonPay? What was the aha moment that made you want to go into this industry specifically?
Well, the aha moment is it's way cooler than finance. So I guess, when I started my career, I was a suit. I worked in the pensions industry at this company called Reddington. We were advising some of the biggest pension funds in the world. And it was there that I started to see just the way that the legacy financial system was built. It wasn't built on internet rails. And I mean, it was a really great place for me to understand how asset allocation worked, how there's this whole range of different asset classes from equity to fixed income to real estate. And crypto would just be this new asset class. And I really think it's a transformational asset class that is quite interesting because it's horizontal. It's not just going to be focusing on just one particular aspect of our financial system. It's going to take everything. Everything is ultimately going to become tokenized. So first we start with native crypto assets like Bitcoin and all the network tokens that we're pretty familiar with. But very soon, you're going to see things like tokenized stocks. You're going to see tokenized money market funds. You're going to see tokenized real estate. And I totally see this transformation happening really in a place where it's accelerating right now as a result of getting regulatory clarity, which we didn't have for many years.
We'll get into the conversation of regulatory clarity in a minute here. But first, I was just in New York. I don't know if you guys have seen the MoonPay headquarters just opened there, so congratulations for that. But it's really cool. Keith is super proud, okay? So you walk in there, and there's not just one logo. There's a bunch of logos at the entrance. And so you've acquired a lot of companies in the last couple of years, Ivan. You've acquired Helio. You've acquired, Iron. Explain to me, quickly, what they each do, if you want, maybe quickly for the sake of time. But how do they add value to MoonPay then?
Yeah, so M&A, very important part of our growth strategy. I think we've built a mature market-leading business for on-ramps, and we're going to continue to really double down on building the very best user experience. So, we constantly think about upgrading our products. We have this mindset at MoonPay, we call it Kaizen, which means change for the better and just continuous improvement. We're constantly making tweaks, constantly making optimizations to really improve conversion, because at the end of the day, a customer shows up, we got to figure out how we bring them into the crypto economy. But when we think about our acquisitions, a lot of them have been about these new verticals that we think are very important. So you now have a non-custodial wallet. How do you spend that in everyday life? And so that was really Helio. Helio built a groundbreaking checkout product. They actually power Solana Pay directly inside of Shopify.
Wow.
So you can take your non-custodial wallet, you can take your Phantom wallet, you can connect it to your Shopify, and you'll see magic happen because in seconds, you can transfer a stablecoin, Solana, many additional crypto assets that are on the Solana blockchain, and a merchant receives it in seconds at a fraction of the cost that from traditional processing. And if you think about it from a merchant perspective, I think it's just a matter of time until we optimize into a system that's more cost efficient, that's 24/7. And so we saw with Helio plugging that really important gap. We brought in a team of Solana experts. We think the Solana ecosystem right now is one of the most exciting, just given the incredible applications, the incredible builders that we're seeing in that particular space. And then I think the second acquisition that was important to us was Iron this year. And that's really the next shift, the next frontier that we're seeing in on-ramping, which is I think every non-custodial wallet ultimately has the chance to replace your bank account. And so if that's going to be the case, then we need to build the backwards functionality. And that is essentially this idea of a virtual account. And so we think virtual accounts are essentially embedded bank accounts. And if you think about MoonPay, we have 30 million customers all throughout the world. They've KYC with us. Now we can spin up a virtual account. They can wire money in, instantly convert that into a stable coin, and get started. And we think that's going to be an emerging and really important way that people are going to start to on-ramp.
Wow. The Helio, that's pretty big. I don't think people realize how big these acquisitions are because you may not know the names of the companies at first glance, but because they're not forward-facing, but in the back, it powers Solana Pay, which powers all of Shopify's crypto on-ramp, right, for Solana. So that's actually massive. Speaking of big partnerships, when I was in the office, same day as I saw these logos, there was also a room full of people. One side of the table was, MoonPay employees, and the other side of the room were MasterCard employees. I got one of the hoodies, by the way. Hell yeah. But you just recently announced a big partnership with MasterCard, which is really groundbreaking and massive for you guys, and I think for the industry as a whole. So why don't you take us through what is MoonPay doing with MasterCard and why this partnership's important?
So MasterCard has been a phenomenal partner to MoonPay. If you think about when I started this business, it was around plugging into existing distribution. How many people here have a MasterCard in their pocket? Okay, I would expect like the entire audience because in Europe, MasterCard dominates. We love MasterCard. But what I would say is, for MasterCard, we've been on the innovation front with them. So we've been thinking about how they bring their customers into Web3 for a period of time. For the past couple of years, we helped them launch this priceless initiative where essentially we were thinking about ways that we can engage their consumer base in Web3. So we were already working with them. But then the next natural step for us is, I just mentioned virtual accounts being really important. And I think if you are going to make a non-custodial wallet replace your bank account, you're going to want an issued card against that non-custodial wallet. And I think you're already starting to see it probably every other day, new announcements that non-custodial wallets are launching in this way. And given that we're already powering a lot of this infrastructure, really the plan is to accelerate that go-to-market and make stablecoins and crypto assets spendable everywhere where MasterCard is accepted. And so really for us, it's building on the existing partnership, but really moving on this next frontier, which is how do we get these wallets to actually replace your bank account? And I think MasterCard is going to be a really important part of the equation for us.
Yeah, big kudos to and shout out to MasterCard. I mean, it looks like they're going all into this crypto industry, which is very telling, in my opinion, for all the crypto users, such as myself and you guys. Last week, you were on Fox News. Big news. It was all over my timeline, that's for sure. You announced the kind of like the final piece of the puzzle for you guys when it comes to U.S. regulatory, which comes to the New York BIT license. So take us through maybe what this New York BIT license is and why it's so important, and maybe your thoughts on, because you and I met in D.C. not long ago. So what your thoughts on the current regulatory system in the USA?
So I think it's a real shame that, developers ultimately just want to build, right? And it's really expensive to go get regulatory licenses all throughout the United States, all throughout the world. It's a very heavy part of MoonPay's stack is making sure that we can be compliant in every single region in the world. I don't think it makes sense that every single company ultimately needs to get regulated. And so from us, we're really seeing that as a really important responsibility to enable the DeFi ecosystem to thrive. And so we've been on this path acquiring money transmitter licenses for the greater part of almost 3 to 4 years, right? Wow. And the BIT license was really the final golden stamp, and it was a really important stamp because we wanted to operate directly in New York. There are a lot of companies that want to ultimately operate in New York. How can we accelerate that path, leveraging MoonPay's infrastructure? So it wasn't really just a win for us; it was a win for every partner that's already integrated with MoonPay. New York being the financial capital of the world, we've actually recently moved our headquarters there, as you mentioned. And so I think that was just a really important testament to the work our team has done to make sure that we're on the right side of compliance. As it pertains to like the general regulatory environment, I think there's been a transformational shift. Obviously, an administration change being very important, but really you've got to get these fundamental building blocks in place. Right now we're talking about getting stablecoin legislation passed. That's important because it brings trust into this really growing economic force of stablecoins. 1.1% of the US dollar is now in stablecoins, which is absolutely outstanding if you think about it, without even having legislation passed. And so just imagine what's going to happen when there is that regulatory clarity and banks feel really comfortable engaging with this new asset class. And then also what we're trying to figure out is how do we think about market structure? How do we think about labeling these different asset classes? How do we make sure that there's the right consumer protections? But ultimately, I see a world where you're going to be in a non-custodial wallet. You're going to be able to send money frictionlessly, peer-to-peer, anyone that has an internet connection using stablecoins. And then from there, it'll be, okay, I can earn interest income, I can earn yield. Oh, now I can actually invest in tokenized stocks. And that might not be a big deal to everyday Americans, but if you think about people all around the world, especially in emerging economies, it's a game changer, right? Where we talk about banking the unbanked, now it's just up to having an internet connection, but also giving them access to more economic freedom, more economic tools. They're going to be able to invest in all sorts of different asset classes, enabling them to be more productive. A lot of these parts of the world have terrible challenges with inflation. And so the idea that they can actually put their assets to work in more productive ways, I think is really important.
Yeah, I mean, this has been just like big news after big news for us crypto founders because we're getting mass adopted, everywhere around the world, especially in the USA, which has become kind of a leader when it comes to that. So I kind of want to go there. I mean, it's kind of IPO season right now. You saw the Circle news, I'm sure, with the stock going up, 320-something%. Gemini announced an IPO. I believe Kraken is going down that route. You have companies in crypto adding crypto to their treasury. So you have the blockchain group here, local in France, which is kind of like the French MicroStrategy. You have Sharplink Gaming, led by Joe Lubin and Consensus, adding Ethereum. What is your thoughts on that and this like institutionalization of crypto? Because you're an OG, you said 2012, but you're also working very close to the institutions on the MoonPay side with MasterCard, et cetera. So kind of curious about your thoughts on this latest movement of crypto the last like 12 months.
Well, it's interesting and somewhat ironic, right?
Yeah.
First step is we'd ideally like to see tokenized equities, right? Rather than having just to go, I think where we are right now is, first, it's just an important thing. There's growth stage companies that are real mature businesses that are now getting listed. I think people now see after the back of Circle that it's now possible for more companies too, which is great. We had really a very small population of companies that actually went public in the United States in crypto. So I think it's important for the category. But I'd love to see a world where you could do it in a non-custodial wallet, that you could get access to a tokenized stock and you could start to buy these companies directly. Ultimately, we want to enable people to access these private businesses and enable it to any retail investor. And so I think it's a really important trend. That being said, I think we definitely wouldn't have imagined this a year ago even, right? And so I think the shift has happened so quickly. I don't think anyone has really, now everyone's rushing, which is a really great sign, but it's happened much faster than people expected.
Do you see this trend continuing in a positive way? Some people like to think it could blow up or lead to a longer bear market, et cetera, but that's obviously chatter and banter a lot of the time. But do you see this just happen in an extended period of time?
Yeah, I mean, I'm not going to comment particularly on valuations. I think valuations are a tricky thing to get right, especially in this new emerging asset class and new set of companies that analysts are just getting to grips with. But what I'll say is I do think that this trend is here to stay. We're going to see more companies go public, and ultimately, hopefully, we see more crypto companies replace traditional fintech companies and financial technology companies on the S&P 500. So let's make that happen.
Ooh, I like that. I'm so bullish right now. I already was coming in here, especially with the price of crypto this morning, but I'm even more bullish now. So, a couple more questions for you. We got a little time. I like that. We're going through everything. I want to talk DeFi versus CeFi. So I asked the same question to CZ when I interviewed him in Abu Dhabi last month. Keith Grossman, your president of enterprise, recently posted the rise of DeFi versus CeFi on his X account. The rise of Hyperliquid, I think, also is a proof of that. MoonPay, you guys, another example. How do you guys think about this DeFi versus CeFi environment, and what are you guys doing to keep these wallets non-custodial?
So I think centralized exchanges were the first generation of crypto, and they enabled an easier user experience for customers. But it actually, to me, went against the principle of you controlling your own money. Right? And we saw some of the flaws and setbacks as a result of placing trust in third parties that ultimately, if they didn't have the right safeguards in place, your funds were at risk. I really believe the future should be non-custodial. We should remove as many of the middlemen as possible. I think these automated market makers and DeFi protocols will overtake CeFi. I think that's just a matter of time. You're already seeing that trend move into that direction. I think DeFi moved about 40% of the overall exchange volume in the month of January. And I think that trend, what you're seeing on things like Hyperliquid, I think it's almost doing $12 billion a day.
It is.
I think this trend is just going to continue and move in this direction. From MoonPay's perspective, it's about how do we give that layer of convenience that the centralized exchanges was able to offer, but still enable you to participate in DeFi, right? And so I think historically, the big challenge has been most people still use centralized exchanges because it's a better user experience when you want to wire funds in, right? Because they can put holds on that money. They enable you to trade in spot markets with that money. They do not enable you to withdraw for some period of time, but you can do something as a user, which is a better user experience. So what we've been wrestling with and what we've been really focused on is, by this advent of virtual accounts, how can we replicate that experience that you have from a convenience layer in a centralized exchange, but enable you to trade using DeFi protocols? Because I think that is 100% the best of both worlds. It's leveraging some of the centralized infrastructure to give you the convenience, but to enable you to go DeFi and enable you to access everything that DeFi is able to offer. And it goes back to what I was saying before. I don't think it makes sense for every single DeFi protocol project. In a lot of cases, they don't want to hold on to user data. They don't want to become PCI compliant. compliant. They don't want to hold on to KYC. They don't want to do this stuff. And so they don't want to deal with fraud. They don't want to deal with chargebacks. They don't want to deal with any of that stuff. If we can solve that for them, I think ultimately it's going to lead to better consumer outcomes. And so a really big focus for us is really thinking, how do we build the best infrastructure to enable DeFi to really win and ultimately get to a place where it can overtake CeFi, which I think we're moving in that direction.
So perfect. So on that, we have 1 more minute. So I do want to slide a little question about AI, because you're talking about automated market making, better products, what you're building. So quickly, like, what do you think of the impact of AI and AI agents is going to be on crypto products and maybe within MoonPay?
So the quick take is, if we think about user experience, I talk about user experience all the time because I really think we need to build beautiful products that people love to use. They got to be better than the products that already exist today. But if you think about AI, AI is ruthless. AI does not care about your user experience. All they care about is efficiency, and they're going to be using APIs. And so part of the transformational shift that's taking place at MoonPay right now is making sure that we can be API first, and we can take every single component that lives inside the MoonPay stack and ensure that it can be ingestible by AI agents. Because I do think that it's a matter of time that AI agents are going to essentially execute on your behalf. You're going to tell an AI agent to, I want to rebalance my portfolio. I want to buy X percentage into Bitcoin, 5% of my portfolio into Bitcoin, dollar cost average at this particular price level, and it will go and do that. I think that world is going to happen faster than you think. And so a lot of the work from our side is, how do we make sure that we are able to compete and thrive? If we do not adapt, I do think we will die. If we do not make sure that our business is able to be API friendly and be able to be consumed by AI agents, I think we'll be at risk. I don't think this shift is necessarily overnight, but it's going to happen very quick.
I love that. Ladies and gentlemen, Ivan Soto-Wright, co-founder and CEO of MoonPay. Thank you.
Thanks so much.